Right, learners, as you start partnership, you're going to have to realize that there's a difference between the sole trader that you've been working with up to this point in time and that of a partnership. First of all, we're going to have to adapt our ledger accounts, and it therefore is going to have a bearing on the sharing of the profit and your balance sheet. Now, just as a quick recap, remember a sole trader that you've been working with up to now has only one owner. So we would have one capital account. So normal credit balance, and if he puts extra money into his capital, it would increase. Remember, the capital account increases on the credit side. As always, you'd keep a drawings account with any drawings he took, whether it's cash, trading stock, or stationery. And then at the end of the year, that gets closed off to your capital account. So although this person had 360,000 in his capital, he's taken out 51, and he'd have 309 left over. Now that's what you've been doing up to this point, so there's nothing. Right, now if we're going to look at a partnership means 2 to 20 people to get together, and they put money or skills into a business, and then they will share out the profits in some way between them. Now, because of that then, because you've got, and I'm only assuming 2 at this stage, the first thing you're going to have to do is split the capital. You're going to have separate capital accounts for each person. The reason being, it's important to know how much capital each person has got, in case you have to pay them back at some time, or as you'll see as we move on, they often earn interest on their capital balance, so we need to know. So again, still the same, capital has a credit balance, but the capital account will be used only for the capital that they put in. Then, obviously on exactly the same way, we're going to bring in a drawings account for each person. Following the same logic, we need to know how much each partner is drawing out of the business. So any drawings that he actually is taking out of the business, we would have separate drawings account. Now this is where the difference comes in. We need to keep control of, first of all, the capital each person has put in, the drawings that each person has taken out, and then their share of the profit, the money they're earning. And so we are going to bring in 2 more accounts called the current account for each person. So whereas in your old sole trader, you had only one capital where the profit that was made would add on and the drawings, we now want to keep the actual capital separate. So this division of this profit is going to go to a current account. Current meaning it's running at the moment, and these partners can take this money out. This is profits they've earned. Now the current, exactly the same as the capital, will have a credit balance. So when we come to close off our drawings account, this drawings account is going to be closed off to the current account of A. Now please learners, you need to note that you need to say the names of these people. Don't think it's obvious because I'm going to take it to the partner A's account. You must write it down. So this drawings account at the end of the year will be closed off to the current account of A. So we'll have 51,000. So out of his 80,000, he's now drawn out 51,000. Likewise, the same with partner B, but obviously it's going to go to a current account for B. And in his current account, you're going to have a drawings for B, and that will be the 70,000. Now you can see in this case that B has actually drawn more than he had in the business, but we now need to still go further, and we've got to divide out the profit. So in this lesson, all I'm doing is focusing on the fact that you've got different accounts. You've still got a capital, but it's only kept for the capital. You still got a drawings, and it's just for their drawings, but you have to have separate capital and drawings for every partner. And then we're going to bring in a current account, which will be the working account, where we will be bringing in the profits and the drawings. So I'm going to stop at this point, and you can just sort this out in your book, and then I'll carry on in another video clip.